Hi everyone, welcome back. Andrew Crossley, property advisor and founder of Australian Property Advisory Group.com.au. We represent the buyer, not the seller. Today I've got Coral Page from Knox Taxation and Business Services in Knox. How are you, Coral?
Thank you, Andrew.
Welcome.
Thank you.
Coral, I often get asked several questions from an accounting perspective, which I'm often hesitant to answer because I'd rather them seek the right advice, which is very important for everything a person should do with investment property. One of the main questions is depreciation. Could you explain what a depreciation schedule is and why it's so important?
A depreciation schedule is made up of two components. It's the expense of the fixtures and fittings that have been put into a home, such as the oven and the carpets and curtains and those things. And then there's also the cost of construction of the building. And the tax office allows you to actually write those expenses off over a period of time as a tax deduction. And the beauty of that is that it gives you expenses in your tax return or tax deductions without actually having to be paid out of your pocket, as you might with rates and repairs. So it helps an awful lot with the affordability of the property.
Great. And there are only a few people that are qualified or recognised by the ATO to write such a report. What are they called?
You need to use a quantity surveyor. The ATO won't accept your valuation of the building or of the fixtures and fittings. If you do buy a new fixture, you can use the receipt for that, but it must be an actual figure. But where that's not able to be ascertained, then you must use a quantity surveyor.
Great. Now, a lot of people don't get a depreciation schedule done, and a lot of people do, but often that's not quite there yet. Even if you have one done, you can certainly help yourself with reducing the holding costs throughout the year rather than waiting until your tax return. Can you explain?
Having a depreciation schedule could give you easily another $2,000 to say $4,000 on your refund from holding the property. It's not unusual for a property to give people an extra $5,000 to $10,000 as a refund, and rather than having to wait until after the end of the financial year to get that refund, the tax office will allow you to submit what is called a tax instalment variation, and we can estimate what the taxable loss is on the property, what the refund's likely to be for the next year, submit that to the tax office, and they will actually advise your employer what to withhold in tax, which is a reduced amount, so you can actually get that refund spread across 52 weeks of the year rather than having to wait until after the end of the financial year for that refund.
Great. That's very helpful, and I think one of the reasons why I like talking to you so often is because, unlike some accountants out there, you're really approachable.
Oh, thank you.
And you keep things really simple for your clients.
Yeah,
so thanks for coming in.
Thank you.
And thank you for listening. Should you wish to contact Coral Page, please call me on 1300 760 901 and I'll be happy to put you in contact with Coral. I certainly trust her, and I think that everybody needs the right team around them. So thanks again.